Good morning. I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Brittany Umar of The Street, and together we bring you Morning Call Express. So futures are taking a positive tone this morning as Merkel heads to Greece. The IMF has lowered its world growth targets. Earnings start today. There's a lot of headlines out there, Scott. So where's your focus heading into trading today?
My focus is to see if we can continue to hold above almost that 1455 to 1460. Last week we tried to break above it. Friday there was a little bit of power after the jobs number, but then once I think the dust settled and people were a little unhappy that they thought the 7.8% number wasn't real, Mr. Welch. Anyway, at this point we're trying to see if the composure remains the same. So far that Friday move off the highs didn't lead to much. Yesterday the downside action was contained and it seems as if, status quo as far as the recent composure of the market.
And banks looking a little bit better right now?
Yes, banks have been something that keeps leading us off the lows. Yesterday, they actually moved and went positive as the market was weaker. I think there's starting to be a lot of optimism about bank earnings. On Friday, we'll see Wells Fargo and JP Morgan. So I do think that people are starting to look there with the glass half full versus half empty as they've been acting much better and appreciating.
Now, what levels would you say that you're watching in the S&P right now?
So let's take a quick look at the chart. So if you look at the chart of the S&P, you will see, again, it's been a great macro move from about a year ago below 1100 all the way to where we are at 1455. But you can see we've come a long way. And now we're wedging. This was that little fake out that we had on Friday, right into the old highs of 1474. We're holding the 8-day moving average right around here. I'd say as long as we stay above this 1450, it'll make it pretty easy for intermediate bulls to stay long. And then if earnings season isn't as bad as everyone thinks, perhaps we take out that 1470 area.
Well, we mentioned that banks are acting better, but tech still looking weaker. Apple still not looking so good. What do you think of the Qs right now?
I think the Qs are at a very important spot. They're one of the few ETFs or sectors that are at the 50-day. So, you never want to see tech lag, but when you have something like Apple that's been going down every single day, it's a big component of it, you have to watch out. So if you look at the chart real quickly, the Qs, you will see we do have the midst of a little bit of a head and shoulders formation here, but we're hugging the neckline. So right now, I think traders are going to be watching the 50-day. As long as we stay above 68, I think we can hang in there. But if we start breaking and closing below 68, you could see downside in tech and probably in the S&P. And if you look at Apple, just to give you a quick look before we go, this also had the same type of pattern. Head and shoulders top, broke the 21-day back on September 25th. Guys switched gears, got out of it. It's been a great two-way trade. More to the downside. And then here's where it broke the 50-day, and this 100-day is coming up right around 620. This is a huge level in this stock, but right now we'll use this pivot of 636 as a pivot to trade against because, we do have a lot of time between now and earnings, so, it could, trade around a bit.
Well, we've got a lot more to talk about, so stay with us for the full morning call.
Hi, I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
We talked about tech still looking weaker, weighed down by Apple, but Scott, let's talk Google. Google also showed some downside action yesterday, gave up 9 points, retested the 8-day. So what levels are you watching now?
I think first we're going to watch yesterday's low, and the stock's had an enormous move. You've had multiple buy points on this stock ever since it reported last quarter. You could have bought it 625, 644, 680, and then all of a sudden went as high as over 770. So it's always prone to a little bit of a pullback, especially when you see some other high beta tech like Apple getting hit on the chin a little bit. I know people think that Google's stealing their lunch, but people do get a little bit skeptical, or at least some type of movement could happen here. And if you look at the chart of Google, you will see here is where it broke the downtrend. This was an area to get long. When it broke this particular area also is another long, and then it's been riding the 8-day. So for the first time in a while, besides right here when it tested the 21-day, it went below the 8-day. So for short-term intermediate traders, some guys probably are trying to be cute and get a little short. I would say, watch the low of 754. If it breaks below 754, if we get some more weakness, you could see a little bit of downside action. And last time it had, it touched the 21-day, it held and bounced off and continued. So at this point, a little choppy up here, but rightly so considering the type of move that we've had here. And we'll talk a little bit more strategy as we get closer to earnings there next week.
And choppy action out of LinkedIn. It did break below key moving averages yesterday, but still trading above support. So should we expect some follow through today?
It's still trying to get away from the social media stigma that Facebook and Zynga and some of all these bad social media stocks. I would say it's still in the game, still acting well. It's holding above most moving averages, like you said. If you look at the chart here, I know that I got stopped out just because this choppiness was driving me nuts. If you're a macro investor, I think you're fine. I think for traders, though, we're going to wait to see if it could finally get above 123 to 125 for momentum, or perhaps it trickles down to retest this 50-day moving average right here. So right now, I don't want to be involved here, but overall, you go to your monthly chart and you will see that this has acted very, very well. It's near the highs, But again, once things continue to go and extend, you just got to be a little bit more, just say, prudent. And at this particular point, I would say that this is one of those times that social media is really trying to figure out what's next here. And right now on the weekly, you get even a different picture here. It is flagging really well. Here was your breakout. I'd say the longer it stays above this 116, the better. And then at some point, it could break above 125, which would also eclipse this level and get you that 140 or 145 at some point in the next 6 to 12 months.
Well, it's not all bad in tech. We did see bullish signs out of Amazon yesterday. The stock showed relative strength. What levels are you watching in Amazon?
This one, has been tricky, but then as Apple got weak, this one got a little bit stronger. So if you look at the chart here, you'll see that also many buy prices. This was the last quarter, came out with earnings, 230, re-energized right around here, eclipsed above this. What was that? I remember, I think it was like 240. And now it's been going sideways, consolidating. You did get a nice 2-day move that was tradable as it broke this mini little downtrend. It's now holding the upper half of this area. I'm not sure if it's going to be able to break above this area pre-earnings, but if it does, the level that I think shorts will be covering is if it starts getting back above, just say 262. But overall, this is acting well, much better than Apple, and it's proving that people really like to stay with this one.
And Netflix, big gain yesterday on an upgrade. The stock climbed 10%. How do you trade coming into today? Well,
I think some traders are going to be a little upset because yesterday it was upgraded, closed on the highs in a week tape, so they probably took it out long. And then today it was downgraded, I believe, by Merrill. So, a little push-pull, but, if you took too much size, look where this thing came from. You acted a little bit, non-prudent or unprudent, whatever, however you want to say that. You look here, look at the chart, it's had a major move. This is when it broke its downtrend. I remember when it was waking up. I remember when the hedge fund manager talked about it, how it was acting better, reclaimed the moving averages. You had a nice 2-day move, held in, got upgraded, and at this particular point, it filled the gap, which is what a lot of stocks like to do. So if you're coming in and you want to really see how strong it is, see what it does with this type of downgrade. I think it's only down like $2. This is big time support right around 70. As long as it stays and goes sideways and protects a big portion of this gap, it could see some higher prices. So at this point, it's come a long way. It was downgraded today. If you're not committed and you're long it, salvage it. If you are in it for bigger, longer prices, it's going to just take a little bit of time.
All right, well, coming up, we're going to go in the trenches with commodities, but first a quick commercial break. We'll be right back.
Hi, I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
We're back and talking commodities. Let's start with gold. The GLD fell below its 8-day yesterday. Next support is the 21-day, which has been providing good support. So what levels would you say you're watching with the GLD?
Well, ever since it broke to the upside on August 21st, it's been riding the 8-day, but then it's pulled back to the 21-day, once or twice, which was, which proved viable. So for that to continue, it's got to hold there. I know there are some people who are macro holders in gold, and they're like, this thing's going to, 2,500. Let's don't even worry about it. Then you have traders like me who get in and get out and try and stick with moves. And at this particular point, if you look at gold, you will see that it had a really big move from that level, broke this intermediate downtrend right here. Since then, hugging the 8-day. Here it, touched the 21-day once. Here it touched it again. And now it's not showing momentum. I know the other day I was talking about trying to play it for momentum, and it wasn't ready yet, because look at the size of this move. So at this point, if you want to take a closer look, I did like the fact that it opened up down yesterday and rallied off those lows. So right now, it's below the 8. Here's the 21-day with maybe a little bit more time. This catches up, and then finally it goes. Look at last time the 21-day caught up, pow. This time held the 21-day, pow zam, whatever you want to say, woohoo! And now at this point, you could trade against 171.68, and here's your 21-day. So I would say at this point, it's still acting pretty well.
Now, what about silver? The SLV did trade down to retest the 21-day yesterday, so where's support right now?
Another great thing to look at. I was in it trying to play a momentum move and didn't have momentum, so I said I'm going to get stopped out, and that was Friday. So maybe with a little bit more work, a little bit more time, it could happen again. So if you look here at silver, you'll see, this was the day I got stopped out because I wasn't playing it for an investment. I was playing it for a move above 34. If you remember, this is when we got involved, when it broke above this area, on August 20th, and you had a nice move. Then you had another nice move as it held the 8-day, almost touched the 21. So this, is right at the 21-day. I would say if you're an intermediate trend trader, be long it versus this 3240. It could use some time. If you look at the longer-term chart here, you will see that it's coming up to areas that it's going to take a little bit of time to get through. There's a lot of resistance from this recent move, or not even the recent move of the past year or so. So sideways action is good, and then if you're a momentum guy, as soon as it starts getting above 34, then I think you could see a move to probably around 38.
And oil, the OIH has been in a downtrend since mid-September, but we did see a small rally after it touched support at 39 yesterday. So could that be the new level to trade against?
It can. But first we'll take a quick look at oil just to make sure, because they kind of move sometimes in tangents. So if we go to oil first, you will see we talked about how oil diverged from the market, how oil broke its downtrend right around here, its uptrend that was put in place since June. Look at the potency of this day. That gave you some clues that there's going to be more downside. So, fast forward to where we are now, it's still, it's still weak. It's still below all these moving averages. It's still never filled that gap. It's trying to hold in there. So if oil wants to make another move lower, it's going to have to get below, just say 32.52 in the USO. And then you have a small little, downtrend right here. If it starts getting above 33.70, then all of a sudden 34.15 is more of a macro area. So I think this is probably like 91 in oil land, and right now this is around 89.5 or so. So we'll see what happens. And then, like you said, with the OAHs, it's important for that group. It's been battered. This was a really it had a really nice spirited move off the lows, but it's still never been a leadership group. It still hasn't gone above this mid-level resistance. Look at all this supply up here. So when the market pulled back, it pulled back more than everything else. So at this point, if you're a dip buyer, you just got to dip. So at this point, if it starts to get above this, what is this, 40 area, perhaps you get a little bit better movement here. So this is a little, just a lower level downtrend to play against. So above 40, it would help the market. And then you have the moving averages that come into play around 40.77.
Okay, let's do some quick hits here. JP Morgan earnings on Friday. What levels does JP Morgan need to hold right now?
I think it's healthy that it went positive yesterday. I'm long JP Morgan. As long as it stays above 41, it's cool. It's cool. Good job, Jamie Dimon. But again, it's going to be about the earnings on Friday. And these banks have had a nice move, and people are getting optimistic about the earnings, so let's hope that they deliver. It's going to have to be positive and a little bit positive forward-looking guidance in order to get above this 42. Just say, take a quick look at this chart. For this to get above, just say 42, what was this, 30 from Friday's high, it's going to have to be a good report. It's come a long way. So, I think we need to hear what he has to say on Friday.
And LVS dipped below its 8-day and its 21-day yesterday. What levels are you watching now?
This one, we tried to stay with it. It had an awesome move from the capitulation lows in July. It's flagged many times. I've talked about trying to stay with it lately. If you look here at the chart, you will see, it's now like kind of curling low. I wouldn't say like run for the hills, but there's been some, weak Macau numbers coming out. It's coming into some support. It could see the moving averages down here at 43. If you remember, this is when we called the capitulation low. Since then, you could have bought it here. You had this nice little flag pattern. You could put it here. It's been doing it the whole way up, very methodical. So at this point, I was looking perhaps if the market was going to continue, kind of get above this 47.20. At this point, it's channeling, so I would say it's probably going to be whatever goes on with earnings, or if they start talking more about how this is a real estate play versus not just Macau.
And Lulu, quick little rally right at the open yesterday, but then gave back all of its gains after the first hour. So where's that next breakout level?
This one, a lot of guys the last few days have been chopped up because you had a huge move weeks ago, and since then it's just been choppy action, but it's still, it's above most of those levels. You look at Lulu here, it's had a big move. This was, pretty exciting move, big wide range bar. We've now held about half of it, still holding the 8-day above the 21-day. But in order for it to finally get a little momentum, it's going to have to start clearing 77-ish. So 77 to 78, perhaps it can go again, it can get on the move. The problem with the market right now is that there is not much momentum. Traders love momentum. Sometimes you could have a rally, and then every time it looks good, you add to it, and then you ruin your prices, and that's why I think some guys are frustrated. I know for me, the last week or so has been a little bit different, so I've been trying to just kind of slow myself down, because anytime you add to a position, it hasn't really been working, or it's been hard to continue that profit there.
Yeah, speaking of a lack of momentum, Schlumberger also showing a lot of weakness, as is the rest of its group. So where's next support?
I think it found a little bit yesterday. Turned green yesterday when the market was somewhat weak. So maybe it's ready after a big move that we've seen to the downside. You look here at the chart. This gap up failed real quickly, showing you that momentum left. It's now on the 200-day. I hate when stocks come in and hold their 200-day when the markets are at their 50-day. That just shows you that it's relatively weak. So a lot of people tend to love Schlumberger because when it moves fast. So here's your little green day. But if you want to be in tier 1 versus this support, fine. But it really is going to have to start getting above, just say 72.60-ish in order for it to get back in motion. And I'd rather wait for it to get back in motion before I touch it.
And finally, Qualcomm getting a little beaten up. It lost some of its key moving averages. Are sellers getting more aggressive here?
I think people are kind of worried. They see the weakness in Apple and some other areas in tech, so they just put Qualcomm in there. Lately, the stock hasn't acted well. In the first quarter of the year, I rode that stock really well. It was really easy. It was methodical. Lately, it's been choppy. You take a look at the pattern here, and it's a little concerning. You do have just kind of like tech, the makings of a Head and Shoulders top pattern, where here's like your left shoulder, there's your head, a very quick right shoulder, and then here is your support. So closing the lows yesterday, I would watch Apple. It's been trading a little bit with that, but below this 61, it could see some more weakness down to about 59. So I would just say this pattern is more bearish than bullish.
Well, we talked about some of today's big headlines and the market's choppy behavior. So with everything in mind, what's your strategy heading into today?
It's been more tactical. I'm trying to stay with a bullish bias, and I think as long as we stay above 1455 in the SPX, that I will stay with the bullish bias. I think that you don't really need a bias because you've had a lot of 2A action. A lot of guys on my desk have been making money short Apple, where I've been trying to trade the bounce, and the last few days out it's been a little bit trickier. Today I'm going to focus on Apple, see if we can get a bounce. I know it was down $7 at 6:30 in the morning, and then it was almost positive when we came in here. So I think use that 636 as a pivot, and then I think bigger support, which could come into play, in the next week or two going into earnings, is down at 620, but it doesn't have to get there. Again, banks kind of strong. I would say see if that continues, and see if you could actually add to winners, because lately, since that high that was put in place on September 14th when the oscillator was screaming plus 60 and we said lighten up, it's been a very tactical 2-8 trade. But at some point when the frustration sets in and everyone's saying that doesn't work, then you can continue. And again, the longer we stay above 14, I would say 50 to 14.55, the more uneasiness that some of these hedge fund managers or money managers are going to have, because S&P is up 16% or so, NASDAQ up I think 17 or 18, and I think there was a survey out there that most money managers are up less than 5%. So we go higher, they got to get in.
All right, that's your morning call for this Tuesday. Happy trading, everyone. Have a great day.